Welcome to the January 31st, 2022 advance report from McGowanGroup clients and networthradio.com listeners. I'm Spencer McGowan, your financial weatherman, with your fast-paced tour of the global financial markets. This week is a great example why you subscribe to YouTube McGowanGroup. From real portfolio managers at McGowanGroup Asset Management, I am President, McGowanGroup, and founder. There are 10 of us on the team devoted to your success. This video is evidence, and this is the type of week that you want to tune in, find out what is really going on in the markets. And Monday was a good example. Dow down 1,000 points at the lows on Monday. The low in the Dow, 33,150. What the heck is going on? We're seeing a correction. Dow and S&P fulfilled the official definition of correction, which is 10% from recent highs. But there's more to the story here. It has to do with the Fed. A lot of this sell-off corresponded to Ukrainian headlines and the Chinese Air Force incursion into Taiwanese airspace with 39 military aircraft. That sent shockwaves around the world as well. But this correction phase is actually very normal. The Federal Reserve is the other component, raising the short rates. They stop printing money here over the next 60 days. So by springtime, there's no more money printing and they start to raise the short rates. T-bills already up to 0.2%. What happens when the Fed starts to tighten and stops printing money? You start to pop bubbles. NASDAQ Composite Index, the NASDAQ 100 is down 14% so far this year. And we did see in the Russell 2000 Small Stock Index a 20% correction. What are they selling off? They're selling off high multiples, technology companies that aren't making money yet, and that rampant speculation is the bubble popping. We saw it last year when everybody was enamored with meme stocks and other things. Well, now you're getting back to real valuations, which I'm going to cover, and it's very, very important going forward to respond to these types of corrections. In 2010, 2011, and 2012, in that recovery, you got about a 10% correction each of those years. The headlines back then had Europe as a big problem. There were other factors in the sell-offs, but those corrections turned out to be good opportunities. I'll show you why here in just a second, but let's get to crypto. The cryptocurrency market, boom, this is Bitcoin. It went to a full 50% correction for both Bitcoin and the collective value of the 9,200 cryptocurrencies that are out there. And that bubble has essentially popped. The last time it popped, Bitcoin went from 20,000 down to 3,800 at the pandemic low. So it's not counter-cyclical. When you wanted the money the most, it wasn't there. This was down 80%. Does this follow the same path? Well, it takes away the luster of the cryptocurrency craze, well, especially when you take the market from 2.7 trillion down to about half of that, more than $1 trillion gone. Speculation and speculation in the markets, that part of the market cycle is over. But look at this. This is a third of the S&P 500 companies reporting year-end results. And what do we got? Sales growth, 16%. Earnings growth, nearly 30%. That's actually very healthy. The bright spots in here, huge increases in materials, industrials, which really weren't making money a year ago. Energy, 81% sales growth, and yes, the profits have skyrocketed and the cash flows. Healthcare doing well, 22% earnings growth, 12% sales growth in the medical dividends. Here, this is kind of ironic that we look at the medical side. The medical index is down for the year, but the big medical dividend companies that pay out generous cash flow with double-digit growth rates, those companies are actually up for the year. Wow, there's a clue as to what we want going forward. We want cash flow and real valuations. This chart is sector performance. Well, obviously would rather be this line right here. What is that? That's energy. It's the only thing that's up so far this year. the exact opposite of what we thought would happen in the green revolution. It's just going to take a long time for the clean technology revolution. It's been underway for quite some time. But the other sectors, the bottom sector, surprising, consumer discretionary. You take gasoline, utility bills, and food bills going up, you have less discretionary income. What does it do to the housing market? Well, Fort Worth-based D.R. Horton, a leader in the industry, down 20% so far this year, indicating that we may have hit the high point in the housing cycle, especially evidenced by lots of people telling me that real estate never goes down and they're going to go ahead and get a rent house or a second house. We saw that in 2007. So now, top 10, bottom 10, the companies that have performed the best and the worst year to date, just as an indication. It's not hard to see a pattern here. Halliburton, Schlumberger, Occidental Petroleum, EOG, ConocoPhillips, Apache, ExxonMobil, Hess, Marathon, and Diamondback, all with gains about 20% or more so far this year. The bottom is in the speculation. Moderna really took it on the chin because they essentially just have one product, the COVID vaccine. Etsy, Netflix really took it on the chin. Advanced Micro, it really surprises me some of the semiconductors are correcting while the earnings are so good. Not sure what to do with that yet, but it does give you an indication when you tune in each week what's working and what's not. In this market, keep your head about you, get paid cash flow, take advantage of big swoons, like we added a dividend candidate on Monday this week near the lows in the Dow. That type of careful selection with an emphasis on getting pay raises during corrections, that can make all the difference in the long-term reliability. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in, thank you for subscribing, and thank you for sharing. Thank you for tuning in to Net Worth Media today and our efforts over the past 2 decades to educate clients and help clients make great decisions. That's the reason that we're here at YouTube McGowanGroup, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowanGroup Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowanGroup Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.